Hi, Malcolm here, and this is the Energy Action Market Wrap for Friday the 18th of October, where we look back on the last 7 days in the electricity market. Demand's up in New South Wales, but that's mostly because of a bounce back after the Labour Day public holiday in the previous week. Demand in Victoria is down a little, and it's not that much changed in Queensland and South Australia. Daily average prices are down a little in New South Wales and Victoria, but up by $25 to $35 in Queensland and South Australia. And that's because for the first time in quite a while, we've been seeing a much reduced number of negatively priced half hours in both of those states, making the impact on spot prices much reduced. And on the high side, still nothing anywhere above $300. Futures aren't going anywhere, although I have to say that for calendar 2020, these are being supported by worries over possible load shedding in Victoria during the summer, and whilst prices for the following calendar year aren't moving, they are at a lower level across the board. For commercial and industrial customers, the Energy Action Price Index has levelled out for Victoria and South Australia, and there's been a slight uptick in New South Wales, whilst Western Australia continues to trend sideways. Snow and water is still improving, although a little slower than in previous weeks. Large-scale certificates have stabilised at around $44, coming off from a short-term peak of $50 in September, and forward prices have firmed a little at the front end. In the news this week, Friday's Herald reports that the federal government could approve up to 6 new generation projects before Christmas. These would be under a programme launched earlier this year to provide support for new firm generation, which basically means anything that isn't wind or solar. But only a single coal investment is in the running, and that's an upgrade to the existing Vales Point power station in New South Wales, with all of the other applicants being either gas-fired generators or pumped storage. Elsewhere, the federal government's Snowy 2 project has been attracting some criticism from both regulators and from the industry. 30's Age quotes Energy Security Board Chair Kerry Schott as saying that government interventions such as Snowy 2 are holding back private investment. While back to Friday's Herald again, and both Energy Australia and Alinta said that the project could end up costing customers more in the long run. That just about wraps it up for me. To subscribe, hit the red button below if you're watching on YouTube, or subscribe to our mailing list through the link provided if you're watching on Facebook or LinkedIn. And as always, have a good one.